Okay, it's 2 o'clock. I'm Mark Learmonth, Caledonia's Chief Executive. I'd like to welcome you to this session where we will be discussing the Q3 financial and operating results for Caledonia Mining. I'm joined here today by Camilla Horsfall, our VP Investor Relations, and Chester Goodburn, our CFO. We have a presentation to run through, which I'll run through, and then Chester will deal with the financial aspects. Then at the end we'll have time for questions. Okay, so with that we'll start. Okay. Well, just in summary, Chester will go through this in much more detail. We announced the production numbers previously, but over 21,000 ounces of gold for the quarter. That's the second consecutive quarter where we've exceeded 20,000 ounces. So I think that makes it pretty clear that to all intents and purposes, we've now achieved our target production rate of 80,000 ounces a year on an annualized basis. The gold price wasn't particularly helpful, down 4%. So that drives the revenue of just under 36 million for the quarter, just under 108 million for the 9 months. Gross profit was about 15 million for the quarter, 50 million for the 9 months. Again, Chester will go into that in more detail. And then the earnings per share, the adjusted earnings per share, was down slightly from 69 cents to just under 61 cents. Again, Chester can give you more context on that. But operationally and financially, it was a very creditable quarter. In terms of safety, there was an increase in the lost time injury frequency rate. It was 0.12 in Q3 of 2021, increased to 0.22 in this quarter. It's fair to say that we have substantially increased the headcount of Blanket over the last 12 months. A lot of those new workers don't have the background in underground mining, and therefore the awareness of safety issues. We're working hard to address this. The safety scheme that we've established, called NIANSV, which is actually a bit broader than safety. It's safety plus sort of a more broad employee engagement. We've now been able to resume those activities following the relaxation in COVID-19 restrictions in Zimbabwe. So we're optimistic that over the course of coming quarters, we can reduce that long time injury frequency rate. Just a little bit of background on production. As I've mentioned, just over 21,000 ounces of gold in the quarter. That's a record for any quarter. Typically, production in Q1 is somewhat lower, and then it increases over the course of the year. But certainly over 21,000 ounces for the quarter was a record. And the higher production was largely due to an increase in the tons milled. And we've been able to increase the tons milled as a result of further investments in our metallurgical plant, in particular the commissioning of a new ball mill during the quarter. At the moment, Central Shaft is operational in the sense that it hoists waste material, development waste. That leaves number 4 shaft free to hoist ore. Towards the end of the year, Central Shaft will start to hoist ore as well as waste. And as increasingly we see Central Shaft hoisting all of the ore as we move forward over the coming years, that should help to reduce the handling cost of material underground. So at the moment material is hauled up the declines and then transported on that 750 level and then hoisted up number 4 shaft. When Central Shaft starts handling ore as well, it'll be a much more efficient handling system. The production doesn't include about 16,500 tons of ore, which we had in stockpile at the end of the quarter, which contains about 1,700 ounces of gold. And that stockpile we've built up over the course of this year as a result of the fact that our mining rate exceeded our milling rate. Now, clearly, with the commissioning of the new ball mill during the quarter, we've now increased our milling rate, and so we would expect that stockpile to diminish as we go forwards. Production guidance for the year still remains at between 73 and 80,000 ounces. We're clearly, given the fact we're producing 20,000 ounces or over a quarter, and our production in the first 9 months was just short of 60,000 ounces. Clearly, we're looking towards the top end of that. October's production was 6,770 ounces. In terms of exploration, last week we announced that we've upgraded the resource at Marley Green. We acquired Marley Green in November 2021. It had about 1 million ounces of gold at the inferred level. Over the course of the last 12 months, we've reevaluated the existing cores, and we've been able to shift about 440,000 ounces of gold from inferred to M&I. And the grade's good. It's a grade of about 2 grams a ton, which is excellent for a potential open cast mine. Also, we've restarted deep level exploration at Blanket following the commissioning of the central shaft. As a result of the commissioning of the central shaft, it means we've now got more capacity to handle the development waste associated with excavating the haulages out about 300 meters, from which we can then do drilling back into the ore body. And so having now that flexibility, we've been able to start excavating those drill platforms, and we've now restarted our deep level exploration at Blanket with the objective of converting the existing inferred resource at depth at Blanket to M&I, and then also looking for additional resource at depth. Then it's also, as you'll be aware, a week or so ago, we announced that we've acquired a new exploration property called Matapa, which is very exciting. It's immediately adjacent to the Bilboes property, on which there is already an existing M&I resource of about 2.5 million ounces, about 2.3 grams a ton. And we think that Matapa has the potential to be both larger and higher grade. And so the two of those assets together, Matapa plus Bilboes, we think has the potential to create a world-class gold mine. Right, I'll hand over to Chester to take us through the financial results.
Looking at our profitability, our revenue increased quarter on quarter by 6%. That's predominantly due to the increase in the gold sales of 11%, partly brought down by the reduction in the realized gold price that we received for our gold. Our gross profit, that went down by 1%, predominantly due to high production costs that we've incurred. And I'll go through detail in a bit later in other slides. We can see that we've had some inflationary pressures on our costs, as well as some unforeseen maintenance and repairs. Administrative expenses increased during the quarter due to additional legal fees that we incurred on the Bilboes acquisition transaction we concluded in Q3. We've had higher net foreign exchange gains of $1.7 million for the quarter. That and the tax expense that's lower was affected by the higher RTGS devaluation against the dollar and what we've seen in the previous quarters, giving us a lower tax expense and a higher net foreign exchange gain. Adjusted earnings per share reverses non-cash transactions like the net foreign exchange gains and deferred taxes, and reversing that out has given us a smaller adjusted earnings per share for the quarter. This brings about the detail of the production costs. Looking at this, you can see the inflationary effect on the wages and salaries, approximately 2%. Additional production bonuses were paid during the quarter due to our increased production numbers. And the big number that moved up here would be consumables, and that would be due to inflationary pressures and unforeseen maintenance. We hope not to re-incur unforeseen maintenance. That's not the plan. And to bring down inflationary pressures, we hope to get our solar plant online next week, bringing down our electricity costs, bringing down the total production cost, and also gain efficiencies in next year, as Mark has said, with the hoisting of ore-bearing rock through the central shaft. General administration expenses. You can see there that Our travel expenses has increased. That's due to the increase in travel activity post-COVID-19 lockdowns. You can see the additional legal fees that we've incurred to conclude the Bilboes acquisition. And we've also had an increase in investor information focus to tell them about our projects that we've concluded at the Blanket mine, as well as the acquisitions that we've completed during the quarter. Our cost per ounce, on-mine cost per ounce amounts to $734 per ounce. That's very low compared to other gold producers. The increase of $39, $10 of that would be due to inflationary pressures that we've seen, and $15 of that has been due to unforeseen maintenance. As said, we have measures in place to curb that or not re-incur that. All-in sustaining cost includes the legal fees we spent on acquisitions. Taxation we've spoken about. Cash flows, net cash from operating activities in the quarter is up. That's predominantly due to more efficient working capital management processes that we've put in place at a Blanket level. And when looking at our balance sheet is robust. The current liabilities includes $2 million of overdraft. That's the only funding that we have in the group. Group is lowly geared. And the total assets also includes $900,000 of the Bilboes oxides acquisition that we owe to start off in the next weeks. Cash, 70% of our cash resides in the UK or in Jersey, and we do not accumulate any unremittable RTGS or surplus RTGS, and we've been transferring money freely from Zimbabwe as we needed it. Mark?
Yeah, thank you, Jeff. Let's talk about the Motapa acquisition. So we've been pursuing the Motapa asset again for many years, and we've pursued Bilboes since 2016. We've been chasing Motapa for about the same period of time, largely because we believe it is highly prospective geologically, and also Bilboes in conjunction with Motapa potentially creates a world-class gold mine. It's about 75 kilometers north of Bulawayo. Fair to say that the road is by no means comfortable. It's at least a 2 or 3 hour drive up to Bilboes and Motapa. The transaction value is not disclosed, and that's because it falls below the disclosure limit, and also the vendor, for his own confidentiality reasons, asked that we didn't disclose the value. But it's not big enough to be disclosable, and we think it's a really exciting prospect. So the first priority for us going forwards will be to focus on Bilboes, because Bilboes has an existing resource base. It has an existing feasibility study. We'll refresh that feasibility study ourselves to reflect current conditions. And Motapa, because it doesn't yet have any resource base, although we have seen some information which makes us very optimistic. Over the next few years, we'll be doing drilling work on Motapa with a view to creating a resource base there, which will create hopefully a very large combined Bilboes plus Motapa operation. Bilboes Gold. As you know, we signed a transaction in late July to acquire Bilboes. It's got about 2.5 million ounces of M&I resource at a grade of about 2.3 grams a ton, so it's relatively big. It's very high grade for a potential open pit operation, and we're paying 5.1 million shares, which would represent about 28.5% of Caledonia's fully diluted equity, and in addition, a 1% NSR to one of the vendors. This information has already been communicated, but the existing feasibility study prepared by the vendors caters for a mine producing an average of about 168,000 ounces of gold per annum over 10 years, an all-in sustaining cost of just over $800 an ounce, and a very attractive internal rate of return. The capex requirements under the existing feasibility study is about 250 million. Given what we know is happening to steel prices and what have you, that will have gone up. But the very first thing we'll do on completion of that transaction will be to prepare our own feasibility study, which we'll probably do on two bases. One base would be basically repeating the existing big leap from 0 to 170,000 ounces. And the other approach will be to do a more phased approach, which will allow a more judicious use of application of capital. Now, this transaction is subject to conditions precedent, which I think is dealt with later on. That's not dealt with. So the conditions precedent really relate to getting comfort as to the availability of electricity to the project, and we've made good progress there. We do believe that the availability of power into Zimbabwe generally, and then specifically into this project, we're much more comfortable with that now than we were previously. The other conditions precedent really relate to getting approvals for things like to export the gold and to operate the mine in a way that would be normal in any other jurisdiction. We signed the sale and purchase agreement late July. The day after we signed it, I went to Harare to set out to the government what we're hoping to do with this project. We then made various submissions to the regulatory authorities in Zimbabwe in early August. It's fair to say that in August and September, there wasn't a huge amount of activity from the government side. That situation has changed very substantially now, and we are now having very intensive and very constructive engagement with the Ministry of Mines, the Ministry of Finance, and the Reserve Bank. And so we're confident that we're now beginning to move forwards towards addressing the outstanding conditions to complete this transaction. All you see here is production, the estimated production in terms of the existing feasibility study. You can see it sort of oscillates around, but on average, it's about 168,000 ounces. And you can see the pro forma combination of production from Blanket along with production from Bilboes, again, in terms of the existing feasibility study. But all that tells you is that Bilboes is going to add a lot of value in terms of increased production. Here we see the average life of mine cash cost, both C1 cost and all-in sustaining cost, again, extracted from the existing feasibility study. But it's fair to say that it is a relatively low cost operation. But that's driven mainly by the fact that it's high grade at 2.3 grams a ton. The grade is substantially higher than the grade for comparative open pit operations. This shows you what's going on to the shareholding structure. So currently we've got 12.8 million shares in issue. The Bilboes vendors will have a further 5.1 million issued, and that will be split between Tosiana Resources, which is the company representing Mr. Victor Gapari, who will join the Caledonia board. Infinite Treasure will have 1.9 million. They're a Chinese investor group. Baker Steel Resources Trust, for those of you based in the UK, you'll know them. They're a well-established UK-based resources investor. So they'll end up with 800,000 shares. Baker Steel is also going to be taking the 1% NSR. I've mentioned the conditions precedent. We're making good progress towards achieving those. Difficult to put a timeline on it, but I would hope that we get this transaction completed either late this year or potentially early next year. And just to compare Bilboes with other comparable assets. So what you see here is the recovered grade of Bilboes. So the recovered grade is just less than 2 grams a ton. And you can see that compares very favorably with the recovered grade at other African gold development projects. So high grade. In terms of its size, it's got about 2 million ounces recoverable. Again, not the biggest, but by no means the smallest. So in terms of grade, certainly grade and size, it's up there. But the critical thing is the price we're paying. And so you can see that we're paying less than approximately $30 an ounce for this asset, which is cheaper than other assets, especially giving in consideration of the grade. And this also doesn't include the cash that we would expect to harvest over the next sort of 2.5 years from the operation of the oxides. So that would further reduce the acquisition cost per ounce. The tribute arrangement tributes are an established thing in Zimbabwe. Typically, what happens is you end up with a bigger mining company, and then they will, for areas that they aren't working actively, they will allow a smaller miner, sometimes an artisanal miner, to run that sort of area himself or herself, and that's really to avoid a situation where larger mining companies are seen to be holding unnecessarily large amounts of ground and not turn into account. This is slightly different because Caledonia is clearly a bigger company, and so we're taking the tribute over the oxide project so that we can restart the oxide project before the transaction completes. We're anxious to do that for two reasons. First, we'd like to start generating some cash flow, but secondly, we're also anxious to retain the skills base at Bilboes. Bilboes has an existing reservoir of talent. We like those people. We think they're very good, and we want to be in a position where we can keep those people actively engaged. And so, hence using the tribute to restart the oxide project. The funding for the oxide project we've actually just raised an in-country debt facility. We received those proceeds, I think, this morning. Yes. Yeah, which means that we can now commence the procurement on Monday with a view to getting this thing running as quickly as we can. The dividend, we paid a dividend for many years. It was sort of hovering, even initially it was denominated in Canadian dollars, but it was approximately 7 US cents a quarter. Over the course of the last couple of years, we've doubled that to 14 cents. And then for the beginning of this year, we took the decision, as we knew internally, that we're going to be moving towards the next phase in our strategic development, which will require us to put considerable capital into new projects. We decided at that stage to cap the dividend out at the current level of 14 cents a quarter, 56 cents a year, as we now sort of change the sort of slight focus, the focus of the company towards where we are reinvesting for further growth. Okay, so that's the normal contact page. So that quickly runs through the presentation. We have some questions which I can see typed out. I don't know if other people can see that. So perhaps it's probably best if I read the questions then answer them. So one question is, could you give us more colour on the potential additional power line at Blanket? Okay, so there is. Previously, I talked about the power for Bilboes, and Bilboes is in a much better part of Zimbabwe in terms of the grid for getting power to it. But this question focuses on power coming into Blanket. It's fair to say that Blanket is in a poor part of Zimbabwe in terms of the quality of the grid. For many years now, we've complained about not just the incidence of power outages, but also the volatility of the incoming voltage. And so where we are now is that we now believe that it's possible for us to construct a new power line connecting Blanket to a stronger part of the grid, which we expect will provide the additional power that Blanket needs to run at a higher production rate, but also reduce the incidence of power outages. So we're optimistic that should be done next year. Any indications as to the Mataba oxide potential? Mataba, at this stage, we don't know, but at this stage, well, hold on. For many years, Bilboes has kept itself going by running an oxide project, which is relatively shallow material, which you scrape off and put onto a heap leach, and it's a very simple way of gold production. We expect the same thing could apply at Mataba, and so we do believe there is oxide material at Mataba, and actually we drove past it last week, and we can see that there is oxide material there. Whether there's sufficient material to justify the construction of a new heap leach at Blanket at Mataba, or whether it's a question of just taking material from Mataba to extend the life of the oxide project at Bilboes. At this stage, I'm unable to answer that question. But we are confident there will be oxides at Motapa. First pour at Bilboes. Someone's asking about first pour at Bilboes. As I said, we'll probably spend the whole of 2023 doing a feasibility study. And then if we put in say a 2-year construction period, so say 2024, 2025. So I think a realistic estimate may not be that you don't get the first pour of gold from Bilboes until 2026.
Mark, the oxides project would within three months start pouring gold, and within
was that the question about oxides?
6 months would turn cash positive.
Oh yeah,
correct?
yeah. So
yes.
So yeah, I was talking about the sulfides at Bilboes, but obviously restarting the oxide project at Bilboes, as Chester says, would expect to start seeing gold coming out of that oxide project within about 3 months. Question about the increased explosive use. Yeah, there's the question about is it because of lower advance per blast? That is an issue. That is an issue which we believe we've addressed. So we don't expect to see a continuation of the increased usage rate of explosives at Blanket, but we do expect to see continuation of the higher cost of explosives. The question about what is the disclosable limit that Motapa falls below, that's driven by the AIM rules. Offhand, I can't tell you what that is. I just don't have that number to hand. No doubt that we could find it. Do you want to talk about the funding package for the oxides?
Yeah, we are funding the Bilboes oxides via internal cash flows, and what we've done at the Blanket level to give us some leeway on our working capital, that we increased overdraft facilities, as well as increased by issuing some more debt or raising some more debt. That's repayable in a year's time, approximately 7.5% interest.
And that's local debt.
That's local debt. That's US dollar-based local debt.
Yeah. Okay. A question about are you past all of the pandemic-related issues that previously hampered the company? I think in the past we've disclosed that the COVID epidemic actually didn't have an adverse effect on the company, in that it had a negligible effect on our operating costs, and it had no discernible effect on our production. It did, however, have an effect on the rate at which we could continue work on the capital project, in particular the central shaft. And so work on the central shaft was adversely affected because the supervisory team, which was about 8 South Africans, of that supervisory team, half of them decided to go back to South Africa, not unreasonably, when the lockdown in Zimbabwe started. So that impeded our ability to progress that project. And also to maintain production, we had to restrict the number of people who we could take underground to cages. And obviously, in terms of maintaining production, you take down the people who are currently mining in preference to people who are doing development work. And then finally, it's also safe to say that because the central shaft was then delayed because of COVID, it meant that the mining areas continued to go deeper, which means that when we could recommence normal capital activity, we had to develop further to catch up to where the mining areas had got to. So in operational terms, in terms of production and costs, we are through any issues related to COVID. But in terms of higher capex to address the issues of the 6-month or so delay in the completion of central shaft, we are still experiencing those higher levels of capital expenditure to address that. Now, I think it's also fair to say what's becoming increasingly apparent is the effect of COVID on the supply chain generally. One of the issues that delayed the solar project was COVID-related interruptions in the manufacture of solar panels in China, and then the ability to transport those panels from China to Africa. But that's just an example. We're seeing across the board the sort of just in time and the sort of the efficiency of the capital supply chain is much lower now than it was pre-COVID. So it does mean if you find you need a key bit of capital equipment, it just takes longer to get it than we'd experienced previously. So I hope that's a full answer to that question. The solar plan has taken longer than we expected. And basically that's down to the fact that we had an EPC contract with a contractor. It was a fixed price contract. We know that the cost of those solar panels went up. The EPC contractor asked us to increase the amount of the fixed price contract. We declined to do that. And so they slowed down work on the project in the hope that we would relent and increase and pay them more money. We terminated that EPC contract in September. We've got a new contractor, and the connection of the solar plant to the grid, such that it can then start supplying power to Blanket, is imminent in the sense of within the next few working days. So we are very confident it will be turned on, and it will save us about $37 an ounce in terms of our operating cost. So that's solar. Question here: did you say that Matapa could double the combined project with Bilboes? Well, look, we don't. I personally believe that Matapa could be bigger than Bilboes. I don't know so. I just believe so. So I think that's as far as I could go there. We believe that Matapa will be bigger in terms of ounces and better in terms of grade than Bilboes. Question about what's the 311 spent in the cash flow statement from Matapa. Are you able to answer that?
Yeah, that's expense that we've incurred on Matapa, administration and stuff like that.
Legal expenses. Yeah. Don't forget all of these transactions that we conclude in Zimbabwe, given the nature of the jurisdiction, and they're sometimes quite complex ownership structures, do mean that I'm afraid we have to incur some quite substantial legal fees to make sure that we've dotted all of the I's and crossed all of the T's, I'm afraid. So that was the case with Matapa, and also the case with Bilboes as well. Question here: does the additional $3 million to address the remaining issues related to it include the new? I believe it does. Yes, I believe that $3 million does include the cost of the electricity supply from the grid, the new power. Do we have any further questions? Do we have the ability?
Hold on a second, I'm just going to unmute.
We're just trying to unmute.
Okay. Unmute.
Well, does Howard need to unmute himself?
Yeah, I think so.
Howard.
Oh, I see.
Yourself, yeah.
Yeah, I didn't realize you were addressing me. Can you hear me now?
Yeah, I can hear you.
Yeah. Is that 311,000 legal expenses from Matapa or acquisitive cost?
No, it's legal expenses.
The acquisition took place post-quarter.
So what? Yeah, but it's expenses incurred during the quarter.
That's right.
Yeah, we've been working on Matapa for a long time, in many iterations. But it's fair to say that during the quarter, the pace of activity picked up, and we incurred legal fees in the quarter, even though the transaction completed at the end of the quarter, after the end of the quarter.
So you've paid for Matapa already?
We've paid for part of Matapa. It's got a deferred consideration. So we've paid one element, and there'll be post year end, and there'll be further elements to pay in the course of 2023. But the overall quantum is not disclosed or disclosable.
Oh, I see. Okay, thank you.
Thank you. Do we have any further questions? Pause for a few minutes, just in case. Chester, will you stop moving your seat? It makes a terrible noise.
Apologies.
How are you? Okay, I think in that case, I think we're done. So, just in conclusion, it was even though we had some pressure on the cost side, it was really pleasing to see strong production in the quarter, and it's really pleasing to see that we've pretty much completed the suite of assets that we want to acquire. And it really sets the table now for Caledonia to build on the success of Blanket by bringing, in the first place, Bilboes, then probably Marley Green, and then thirdly, Matapa into production over the course of the next 5 to 7 years, with a view to creating a really very substantial and very, very cost competitive Zimbabwe-focused gold producer. So with that, unless there's any last questions, I think we'll leave it. I think we'll leave it there. Thank you very much for joining us.
Thank you.